This video I will explain the difference between mutual funds and stocks with real life examples. Both mutual funds and stocks are ways to invest money and grow wealth over time. Many people use them to try to earn more money than they would be simply saving in a bank. Although both are investments, they work in different ways and they require different levels of knowledge and involvement. Now we will see what are stocks. A stock represents ownership in a company. When you buy a stock, you buy a small share of that company. This means you become a partial owner of the business. If the company performs well, the value of the stock may increase and you can earn profit. If the company performs poorly, the stock value may decrease and you may lose money. Now we will see real life example of stocks. Imagine a small restaurant business owned by many people. If you buy a share of that restaurant, you become one of the owners. If the restaurant becomes popular and earns more money, your share becomes more valuable. In the same way, when you buy stocks, you own part of a company. Now we will see what are mutual funds. A mutual fund is an investment where many people combine their money together. This pooled money is managed by a professional called a fund manager. The fund manager invests the money in different assets like stocks, which is shares in companies, bonds, which is fixed income securities, government securities, which is safe government backed assets. Instead of choosing investments yourself, the fund manager makes the decisions. Now we will see real life example of mutual funds. Imagine a group of 100 people who want to invest money, but they do not know which companies to choose. Each person contributes money into a shared pool. They hire an investment expert to manage the money. The expert invests the total amount in many different companies and investments. This is similar to how a mutual fund works. Key difference 1. Ownership. In stocks, you directly own shares of a specific company. For example, if you buy a shares of a company, you own a part of that company. In mutual funds, you do not directly own the companies. Instead, you own units of the fund, and the fund invests in many companies. Key difference 2. Who makes the investment decisions? In case of stocks, you decide. With stocks, the investor makes all the decisions. You must decide which company to invest in, when to buy, and when to sell. In case of mutual funds, the fund manager decides. With mutual funds, a fund manager makes these decisions for you. Key difference 3. Diversification. Diversification means spreading money across different investments instead of putting all money in one place. If you buy one stock, your investment depends on one company. If that company performs poorly, your investment may lose value. A mutual fund invests in many companies at the same time, which spreads the risk. Now we will see the real life example. Person A invests all money in one shop. If that shop fails, the person loses money. Person B invests small amounts in 10 different shops. If one shop fails, the others may still succeed. This second example represents diversification, which mutual funds usually provide. Key difference 4. Risk level. In case of stocks, it has higher risk, higher potential returns, requires knowledge and research. In case of mutual funds, risk spread across many investments, managed by professionals, often easier for beginners. Key difference 5. Effort required. In case of stocks, more effort is needed. Investing in stocks requires regular research and monitoring. You must keep track of company performance, market conditions, and price changes. In case of mutual funds, less daily effort. Investing in mutual funds usually requires less daily effort because the fund manager manages the investments. Now we will see the simple comparison. Stocks, direct ownership in companies. Investors choose investments themselves. Higher risk but higher potential return. Mutual funds, money pooled from many investors, managed by a professional fund manager. Investment spread across many assets. Now we will see the summary. Both mutual funds and stocks are ways to invest money and grow wealth. Stocks give you direct ownership in companies. Mutual funds allows many investors to pool their money and let professionals manage the investments. For beginners, mutual funds are often easier to start with, while stocks require more knowledge and active management.